Hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Oswal studios. It's a Thursday morning. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning. Morning, Nigel.
Morning.
Lots to reckon with this morning. The tide is perhaps turning for new age tech companies. The US markets have been on the weaker side. Disney is laying off in a big way, right? Over 7,000 employees. So much ground to cover today.
You know, despite all these juicy headlines of large companies laying off, you look at the labor market data which we got, right? And again, it tells you that the tech proportion, and it's interesting data, that the number of tech employees in the US is a tiny fraction. You know, tech slash communications, internet, etc. All of that combined, I think it's about 1% of the US labor force. So, you know, sometimes it's jarring, right? You get all these headlines that companies are laying off, but, you know, the overall aggregate numbers are pretty strong. All right, let's just quickly run you through the setup this morning. You know, this is something we would we should have anticipated yesterday. It's a classic second day flip-flop. You know, day before yesterday, yesterday morning we highlighted the day before action, and it was a hugely volatile day. The market basically could not make up its mind. It rallied hard, it went into the negative. By close, it came back and closed at the high point of the day. But there was a fair bit of flip-flop, and all of that price action was based on comments from Jerome Powell, the Fed chair, who did not push back. It wasn't, you know, dovish, but it was not hawkish. So it was kind of left undecided. And I think this is a classic second-day reaction to events. We've seen this multiple times in response to data. This time it's in response to a speech from the Fed chair. So, you know, complete reversal from a day before yesterday's price action. NASDAQ is down 1.6, 1.7%. And we have at least, I counted 4 Fed speakers, right, who came out and basically sent the message home that rates perhaps need to be higher for longer. So we are back in that same kind of quandary about how high rates will go. By the way, the Fed terminal rate has gone up to as high as 5.2%. So that's something to ponder over. For us here, I mean, oil is the other worry, right? We had the RBI, for example, highlighting the worries with regards to inflation, core inflation, etc. Oil prices are marching up, and they're now northwards of $85 a barrel, which is not a good thing for inflation. And of course, for imports, we import 80% of the stuff. This morning, just to come back to some of the local cues, I think the big one which markets will be waiting for with bated breath is the results of the MSCI review. MSCI basically put out a statement, you know, a few hours ago, basically saying that they've got a lot of feedback from market participants, etc., on the Adani Group stocks, and perhaps a lot of what is defined as free float in the case of some of the Adani Group stocks is not. And they are going to do a review. They're doing a review, and they will sort of release the results of the review later today. I think tonight maybe. So we'll watch out for that. But I think that's a pocket which will warrant close watching. Nifty yesterday closed exactly to the point. It closed exactly at the 20-day moving average. You look at the close at the bottom of the screen, 17,871, and the 20-day is 17,871. But a solid close, a little higher, I think, will do more for the bulls. And if you want to look at one more level, it's the 40-day exponential moving average, which is now at about 17,962. So, I mean, a decent close above 20, a decent close above the 40, and I think you're good to go. But will we get that with the kind of close we have? So supports are important as well. They come in at 17,650 kind of levels. Banks underperformed the Nifty. There, the 20 days at 41,701. And supports for the Bank Nifty come in at about 41,100. So it's still in a range, right? I mean, the higher the day of the budget, the lower the day of the budget. And for ever since the day of the budget, we've been kind of meandering in between the high and the low. So very, very range bound, not really breaking out or breaking lower. Even if when it looks like it's breaking higher, like yesterday, you get a session like what we had overnight, and perhaps softer cues to start the day with. SGX is indicating a 16-point higher start. Morning, guys.
Absolutely. So the SGX Nifty is trending a tad bit in the green. And you'd have to say that from the budget day low, the market has covered a bit of ground, right? The Nifty is up almost 300 points in the last 4-5 trading sessions. And yesterday as well, despite the market, of course, was higher, but you had so much participation across the board, whether it was from Reliance, from Infosys, from TCS. So a lot of large caps really made sure that the market held afloat yesterday. and closed above that 17,800 level. Now, even in terms of, the FI data, the FI selling has reduced quite a bit, which is very good. FI selling has reduced to about 736 crores in trade yesterday. There was more DI buying than FI selling. So let's see if the market has bottomed out around the 17,700, 17,800 level. Of course, there's perhaps one more rate hike coming. At least that's what a lot of economists are penciling in. Morgan Stanley put out a note that they're expecting that the tone of the RBI indicates another rate hike of 25 basis points in the April meeting. So that may have some rub-off impact as well. Now, this morning, the global handover is on the weaker side across the board. There was a 1.5% cut. The headlines are not looking that great with the layoffs that have come through from Disney, the massive restructuring, cost cutting, etc. So all of that put together would have a bit of an overhang. But the Nifty for now is holding on to the budget day low and is, as Prashant was saying, the 20-day moving average is something that perhaps is already here. I'm also watching out for the 100-day moving average at 17,940, which could be the next line in the sand on the upside. The SGX Nifty is indicating a positive start. So let's see. Also, the Adani Group stocks have extended their recovery, and after all the MSCI news flow that's coming through, maybe there could be some more of an upside there. Time will tell. But for now, things are looking stacked in favor of the bulls a bit.
Well, that's right. And it's a big day, actually, because today's weekly expiry as well that plays out. You have weak overnight cues and also the buy on dips thesis. That's going to be tested today, given that the kind of cues that we have. And keep in mind, the SGX Nifty, you compare it with the Nifty future. So actually, it's indicating a mild negative start just to kickstart trade, because the Nifty futures were a little bit higher than that level. Now, we had encouraging cues coming in from the FIs, and I'll get to that in just a bit. But the Nifty as well as the Nifty Bank, they need to get past the key technical level, which is the 20 DMA, and trade above those levels. Then you're bracing for a bit of a short covering bounce that could play out. In terms of the FI data, I say it's encouraging because just look at the institutional flows. Now, yesterday, the FI sold close to 730 crores odd. The 10-day average has been net selling more than 2,500 crores. So their selling has come down, encouraging. Second factor, the institutions, as the FI and the DI number, you put it together. Yesterday, they net bought 200 crores. The 10-day averages, normally they've been selling close to around 450 to 500 crores. And that's why you had a good day. So you don't need the FIs to buy, just need them to sell a little less. And the rest, the markets can manage. That's at least the data points that have suggested the last few days. What are the FIs doing in the FNO market? They covered shorts yesterday, close on 10,000 short contracts. They added longs, close on 4,000 long contracts is what they added. But the encouraging part for me is they wrote puts, and they wrote puts rather aggressively yesterday. Close to around 2 puts were written for every 1 call. And if things go wrong, they're also buying puts. So there is some cushion on the downside. There was clearly a short covering bounce that played out because the open interest was lower on the Nifty. So on the Nifty, you did have some bit of a short covering bounce that did play out. Moving to the options data, I was telling you that put writing was there yesterday. The 17,800 put, it added close to around 65 lakh shares. The premium out there was on an average close to around 50 rupees odd. So that's telling you that the bulls are looking to defend 17,750, and that contract expires today. After a while, we saw the calls that were written earlier, they ran for cover. So they closed out more than 60 lakh positions yesterday. Getting straight to the levels then, 17,800 put is getting written. So 17,750 becomes an important support. The resistance zone comes in that vicinity of around the 100 DMA. So we close at the 20 DMA. The 20 to 100 DMA becomes a bit of a resistance zone, both on the Nifty as well as the Nifty Bank. The Nifty Bank as well, you like to get it past 41,750 odd. The buy on dips thesis is going to be tested today. SGX Nifty suggesting a bit of a flattish to a mildly negative start. Let's see how this one goes.
Yeah, no, absolutely, Nigel. Earnings are not supportive as well, right? Yeah. I mean, I think that's the other worry. If earnings were all raging and, the global setup was a little off, etc., one could understand, one could make the case. But more often than not, I mean, I counted out of 50 companies, 30 companies which actually have seen downgrades for FY24. And earnings season is still on. So I think that is the other kind of worry which we have to kind of contend with. We don't the aggregate Nifty FY24 EPS and how much it is lower by, but 30 out of 50 have seen downgrades, and I think about 11 have seen upgrades. So this is, we'll put that data out later. We'll tell you what's lined up here over the next 30 minutes or so. First up, we get you an exclusive conversation with a special voice from Citi. Matt King is global market strategist at Citi Global. Our research team will get you the top 10 stocks to watch. That's coming up. And of course, Hemang Jani of Motilal Oswal Financial Services for a quick fundamental stock check.
All right, let's begin the day now with some cues coming in on the equities front. We have first up Mahesh Nandurkar of Jefferies, who says with the recent pullback, the Nifty is now trading at 18.5 times one-year forward PE, or a 7% premium to the 10-year average, and the valuation gap versus China is also now back to the 10-year average. This makes them more optimistic on the market outlook, with another 25 basis points hike. Peak rates are looking very near, which is a positive for lending NBFCs. Jefferies has added Bajaj Finance and Cholamandalam to their model portfolio and has added some weight on L&T and Reliance. They've removed ICICI Pru, Indian Hotels and Concord, and they've cut their weightage in ICICI and SBI.
Well, on the rupee, Parul Mithil Sinha of Standard Chartered says the dollar INR has seen upward pressure last week on the back of dollar strength post strong jobs data in the US. Parul expects the rupee to trade in a range of between 82.25 to 83 to the dollar next week, while the next event to watch out for is the US CPI, which will determine dollar trends and Fed rate hike expectations.
Okay, and on the bonds, Parul says domestic bond yields have seen upward pressure on global sell-off post the strong US jobs data and the hawkish rate hike from the RBI. She expects this bearish trend to continue this week as the market readjusts its positioning and absorbs the auction supply. The range for the 10-year benchmark is seen at 7.3 to 7.45%. Parul says the focus now shifts to India's CPI, where they expect to come in at 6.2%, and the US CPI will be in focus as well.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment, where we're looking at Cummins, we're looking at JB Chemicals, Narayana, Hurudalai, and Oberoi Realty. Those are 4 stocks that could react to positive news flow. On the flip side, Adani Power, Escorts, Trent, Honeywell, Piramal Pharma, and Piramal Enterprises, they are stocks that will be reacting to negative news flow.
Okay, let's get you that exclusive chat now. I spoke with Matt King, global market strategist at Citi.